Hello everyone, this is Dimitalk and let's talk about gold today. Before we start, please remember to subscribe on my channel if you want to get more unbiased opinion on the financial market. I'm clearly saying this from my personal thoughts and it's not AI, it's my personal opinion. So gold is down 27% from all-time highs, from 5,600 to 3,960. Right now it is at 27% at the moment. So the real reason behind this is just because right now there is obvious pressure on the gold by Trump's administration with their new Fed chairman Calvin Walsh. It's having the fourth losing week in a row. And the media, as always, is doing the whole gold is dead thing again. We heard about this 100 times, same as heard about the Bitcoin is dead. So what is behind this story? Who want to crush the gold? Is Trump. To get further, we need to understand something called the gold price paradox. When you see a gold chart going up, your brain tells you gold is getting more valuable, but it's not. Gold is a shiny rock. It doesn't grow, it's only glow. It doesn't earn interest. It doesn't change. An ounce today is the same as an ounce 1,000 years ago. So gold isn't changing. What is? The dollar. Gold is priced in dollars. So a rising gold price is really just the dollar losing value. Gold is basically the thermometer for how much trust the dollar. When trust goes down, gold goes up. When trust comes back to the dollar, gold drops. Over the long term, gold has always gone up, which tells you everything you need to know about the dollar. So when gold falls the way it's falling now, you don't ask what's wrong with the gold. You ask who gave dollar all this trust back and why now? The mechanism of price manipulation. That's where this gets interesting. Gold is falling because Trump needs it to fall. And he's built the perfect machine to do it. Think about what's happening with America right now. Jobs are booming. The last report came at 172,000 new jobs everyone expected. 85,000 more than people have been expecting before. AI money is flooding to the market. It's like 1 in 999 dot-com bubble all over again. The dollar is at 1-year high and Trump is out there every day selling America is back and it's a golden age of America. All this stuff again. Remember what gold measures. It falls when the trust in the dollar rises. A booming economy is a machine for manufacturing exactly that trust. So weapon number one is the story. And the weapon number two for sure is interest rate. Gold has one flaw, or it's a benefit. It doesn't pay anything, no dividends, no interest. A government bonds pays you to just sit and wait, to hold the dollar. Gold just sit there, being safe. So when interest rates are high, cash actually pays you. And next to that, gold starts to look boring. That's the world Trump's Fed is building on a purpose. High rates, strong dollar, feel good, very nice, very beautiful story. And they are leaning on the gold at once. But reality is showing that situation in the long term not the same as in short term. After your assets got back to bonds and you got paid dividends on it, the cash is going to the global circulation and the rate of the gold to dollar appreciating the gold again. So dollar losing its value because there has became more dollars compared to gold. Watch what they do, not what they say. Now here's where it gets really interesting. We've seen this exact movie before. Back in 2011, gold ripped all time to 1,920. Every headline was saying it will go to 5,000. Your barber was buying it. Your classmate, everyone who wasn't in the gold before, just hits it and suddenly became a gold bug. Then what happened? The Fed started talking. They didn't even do anything. They just started that the money printing was going to slow down. They call it tapering. The tourists got wrecked. The leverage guys got margin called. And many people got wiped out. But who owned physical gold with no leverage, those guys probably survived. Now put this in context of today. Gold ran to nearly 5,600. The Fed is firming up, the dollar at one-year highs, and the tourists are panicking. We are standing in the same spot as 2012. And this brings me to the 1999, the dot-com bubble. January 2000, there was a Microsoft top, then it's crashed and it didn't recapture all-time highs until January 2017. 17 years. Cisco was one of the biggest companies in the world for 1999. It crashed and didn't recover the stock price until a few months ago. I talk about this because people don't appreciate how bad these bubbles can be. And they don't appreciate that it can happen again. To Nvidia, to SpaceX, to all AI darlings. Watch what the big players are doing with their own money. Let's look at the central banks. They have been buying gold for 16 years straight. The people who actually print money are swapping it as fast as they can. France pulled 129 tons of gold out of the New York Fed Reserve and shipped it back home. India cut its gold held abroad from 55% down to 22% last year. Everyone is repatriating gold back. Entities who create the fiat currencies are giving up fiat currencies to gold. That tells you everything. JP Morgan holds more gold now than in their entire history. Jane Street, this massive hedge fund, suddenly became one of the biggest holders of silver. The media tells us the gold run is over, yet the people who know the most keep buying. Somebody is lying to you, and it's not the central banks, definitely. The people who print money are swapping it for metal. This about that. Think about that. This could last for a while. The 2011 bear market for gold lasted for years. If the job market stays strong and AI mania keeps running, gold could be dead money for a good while. But the AI bubble is going to pop eventually. These bubbles always pop. As dot-com bubble popped before, and railway industry revolution more than 100 years ago. So here's what I'm doing. We just broke the 4,000 level. Honestly, I think 3,000 is on the way, and this will keep going. I'm taking short positions in the market, going with the market and going with the flow. My leverage is not higher than 10x, and I always keep reacting with the market. Just keeping the flow of the trends. Trump and Walsh are strengthening the dollar for now. Probably, though it's gonna be midterms. But long terms, Trump won't be president for forever. So this strong dollar push is temporary. When rates come down, when confidence in the dollar cracks again, gold will have its moment. Then will be the perfect time to go long again. So that's my plan. Stay with the market flow, but do not over leverage. Play trading as a game, risk control over the profit. always stop losses. Always keep a hand on the pulse of the market. I would like to know your plans and your opinion on current situation. If you think my vision is synergetic with yours and you think my thoughts are reasonable, please subscribe on the channel and remember to send it to your friends. This was Dmitry and Dimitalk. Alright, see you in the next one. Thank you for watching.